Even at this very moment, institutions are secretly buying and selling Bitcoin without us knowing. But why does it appear so quiet on the charts? It's because they trade in a completely different way than we do. Most traders have no way of knowing about this. But just as there's no perfect crime, there's no perfect concealment in this market either. The data you're seeing now shows the performance results from January 2024, when Bitcoin ETFs were approved, until now, from tracking institutional footprints and trading accordingly. As you can see, the win rate is 64% and the return is 313%. The maximum drawdown is only 17%, and of course, exchange fees and leverage are all included in these real backtest results. In today's video, I'll share methods to track institutional trading footprints and provide an indicator that you can apply directly to your charts. This indicator displays institutional trading footprints on your chart in real time without repainting, so it's highly practical with solid fundamentals and will definitely be a great help to you. Following the previous whale tracking strategy video, if you watch today's video as well, you'll be able to understand market flows more easily without complex analysis. If you haven't seen the previous video, I highly recommend watching it. Make sure to get the whale tracking indicator too. I've structured the content so anyone can easily understand, so please watch until the end. Let's get straight to the point. What's the difference between whales and institutions? Institutions play a completely different game than whales. Even when buying the same 1,000 BTC, they buy 100 BTC at a time over 10 days. And when selling the same 1,000 BTC, they sell 100 BTC at a time over 10 days. Because buying or selling all at once causes significant price volatility, they minimize market impact while lowering their average buy price or raising their average sell price. This is called TWAP and VWAP strategy. So unlike the charts created by whales, it appears as patterns of gradual rises or gradual declines in a stepwise fashion. So when institutions move, what phenomena appear on the charts? First, across multiple consecutive candles, above average volume appears consistently. Unlike whales who explode all at once, steady pressure appears in the data. Second, price moves gradually in one direction in a stepwise manner. Not sudden crashes or surges, but showing continuous and stable directionality. Third, across multiple candles, similar patterns of movement repeat. For example, if at least 3 out of 10 candles show repeated movements of the same pattern, this is also one of the phenomena indicating institutional market intervention. To summarize, whales leave immediate impact, institutions leave continuous pressure. Therefore, if we use these two together, we can more easily read short-term volatility and medium to long-term trends. Wait a moment. Let me share a tip about using these two indicators. When institutions are quietly accumulating and a whale pulls the trigger in the same direction, what happens? An explosive rise occurs. Conversely, when institutions are quietly selling and a whale pulls the trigger in the same direction, likewise, an explosive decline occurs. So I enter positions more aggressively than usual when these two signals occur simultaneously or both occur within N candles or a specific range. Let's look at some recent real cases. Based on the 1-hour chart on September 10th at 9 p.m., whale accumulation and institutional accumulation traces were detected simultaneously. After that, you can see the price rose sharply, and on August 7th at midnight, institutional accumulation was detected first, and a few hours later, whale accumulation was also detected, and you can see the price rose sharply as well. And on July 3rd at 1 a.m., institutional accumulation was detected first, and 3 days later, on July 6th at 10 p.m., whale accumulation was also detected, and you can see the price rose very sharply. Finally, the situation ongoing until now. On September 18th at 3 a.m., whale selling was detected first, and on September 22nd at 3 p.m., institutional selling was detected. After that, on September 26th at 2 a.m., whale selling was detected, and the decline continues until now. There was one whale buying signal in the middle, so if you entered at that point, you could have taken quick profits and exited, right? The institutional tracking indicator I introduced today can be used immediately through the link in the video comments. Setup methods and usage methods are also available when you enter through the link with detailed instructions. Both English and Korean versions are available for your reference. If you still have questions, feel free to ask in the comments anytime. In the next video, I'll provide the ultimate tool that draws significant support and resistance zones based on CME gap occurring on the Chicago Bitcoin CME chart in real time on your charts. Following whale tracking strategy and institutional tracking strategy, if you can see at a glance the support and resistance zones created by institutional movements on the CME exchange, I guarantee your trading will leap to a new dimension unlike before. You can look forward to the next video. I'll come back with good content and good indicators. Thank you.